A and B are partners sharing profits and losses in the ratio of 3:2. This is their profit sharing ratio. The capitals of the partners were 5 lakh and 2 lakh respectively. According to the partnership deed, interest is to be allowed at 10% on capital and salary is to be allowed to be at rupees 30,000. Since per month etc. is not given, so it would be treated as annual salary. Net profit for the year was 3 lakh. We are required to prepare P&L appropriation account. So now students, in this case, we will transfer this net profit onto the credit side by profit and loss account. That is profit of rupees 3 lakhs. This is profit or net profit. Now students, according to the partnership deed, interest on capital is to be allowed at 10%. So to interest on capital, it is an expense, hence shown on the debit side for A and B. For A, interest would be 10% of 5 lakh, which comes to 50,000. Then students, 10% of 2 lakh, which comes to 20,000. Coming to salary also. Salary is to be allowed to be to salary only for B. Amount is 30,000. Now since every posting has been made here, let us total it out and calculate divisible profits. This total is 3 lakh. Out of 3 lakh, we will subtract the total of this side, which is 1 lakh. Two profits, A and B. We will mention it in the details column, A and B. 3 lakh minus 1 lakh, total profits are 2 lakh. This 2 lakh would be divided in the ratio of 3:2. Since the profit sharing ratio of the partners is given to be 3:2. So for A, the amount would be 2 lakh into 3 by 5. That comes to 1,20,000. And for B, it comes to 80,000. So students, what we have done is, we have transferred net profit onto the credit side. Out of this net profit, we have deducted appropriations on account of interest on capital and salary. And whatever is left, that is 2 lakh, it will be treated as divisible profits, which would be then divided among the partners in their ratio. Ratio in this case is given to be 3:2. So 2 lakh divided in the ratio of 3:2 gives us 1,20,000 for A and 80,000 for B. Let us see how capital accounts would be prepared both under fluctuating and fixed capital methods for this particular question. Now the capital accounts by fluctuating method would appear as this: A's capital and B's capital. The balances of A's capital was 5 lakh and for B's capital the balance was 2 lakhs. Then students, just by following the same principle of ledger posting, the entries on the debit side of P&L appropriation account will appear on the credit side of capital accounts, and they would be by interest on capital. For A it was 50,000 and for B interest on capital was 20,000. For B we had salary also, which appeared on the debit side, so 30,000 here. Then the profits of the partners by P&L appropriation account. For A the value of profits was 1,20,000 and for B by P&L appropriation account the amount was 80,000. That's it. All the entries have been posted here. So now let us total it out and find the balance. to balance carried down 6,70,000. Then the total of capital account for B is 3,30,000. There is no entry on the debit side, so the balance carried down would be 3,30,000 and the account totals out. Remember, all the entries, since it is fluctuating method, all the entries from P&L appropriation are posted directly to capital account. Now, let us come to capital accounts by fixed capital method. So students, what I am going to do is just make certain changes here to make it equal to or to convert it into fixed capital method. Now in case this is fixed capital, then the accounts would be prepared as A's capital and A's current account. That means two accounts for each partner. And the capital account would appear as rupees 5 lakh only, and for B it would appear as 2 lakhs only. Why? Because in this method, that is the fixed capital method, only the balances are shown. So A's capital account will have a balance of 5 lakh. No entry would be made, and at the end of the year this balance would appear as 5 lakhs only. For B, this balance would be 2 lakh, and at the end the balance of the capital would appear at 2 lakhs. Now students, what about the other entries? All other entries relating to interest, salary and profit would have to be passed through current accounts. So that means we will have to prepare another accounts for A and for B that would be titled as A's current account and B's current account. So now students, let us come to current accounts. Coming to current accounts, the format of the current account appears just like any other normal account, debit side, credit side. I hope you will mention particulars and amounts on both the sides. Now coming to the postings, there is no balance of current account as given in this question. So we will directly start with whatever is there in P&L appropriation account. So the first entry was by interest on capital. For A, interest on capital was 50,000, and for B, interest on capital was 20,000. B was also entitled to a salary of 30,000. So by salary 30,000. Apart from this, there was no other entry, but the divisible profits of 1,20,000 and 80,000 were then to be transferred to partners' current account. So by P&L appropriation account, this is profit 1,20,000 for A. By P&L appropriation account, profit 80,000 for B. All the postings have been made. We will total out and find the balance. So the total on the credit side for A is 1,70,000. And this would be your to balance carried down 1,70,000. Coming to B, the total is 1,30,000, and hence the balance would be to balance carried down 1,30,000. So now students, this makes it very clear that in case fixed capital accounts are there, we will have to prepare two accounts for each partner, that is capital account and current account. For A, you can recall that the capital account showed a balance of 5 lakh, whereas the current account is showing a balance of 1,70,000. For B, we can recall that the capital account had a balance of 2 lakh and the current account is showing a balance of 1,30,000.